Hello and welcome to this week's edition of Invest Africa. I'm Alicia Seckham. While the largest and most advanced economy in Africa, South Africa has been amongst the most obvious choices when it comes to investing on the continent. 18 years since the country's democracy, and South Africa's made great strides through its political and economic reforms. But the country may be losing its title as the gateway to the rest of the continent.
Covering a total surface area of just over 1.2 million square kilometers and located on the most southern tip of Africa, South Africa is home to some 48 million people. After the turbulent history South Africa experienced, which was characterized by violence and racial segregation, the first multiracial elections were held in 1994, bringing the 46-year apartheid policy to an end and ushering in a majority rule by the African National Congress, also known as the ANC, under the leadership of former President Nelson Mandela. In a bid to address past inequalities, the country implemented Black Economic Empowerment, a strategy which was designed to increase the participation in the economy of historically disadvantaged South Africans. These types of policies, among other regulatory reforms, have impacted on business practices and foreign investment. In spite of comprehensive approaches to eradicating poverty and hunger through social policies, poverty and inequality is still very prevalent, making South Africa one of the most unequal societies in the world. Although still a middle-income country, South Africa is an emerging market heavily endowed with natural resources such as gold, diamonds and platinum, to which it exports to its trading partners China, USA and Japan. Machinery, chemicals and petroleum is mainly sourced from China, Germany and the USA. The EU still remains the country's main trading partner, and because of these trade ties and the current financial crisis in Europe, the country's GDP has remained subdued. Last week, the country's growth forecast was downscaled by the IMF to 3% from 3.3% for 2013. Growth expectations for this year, however, also lackluster and is predicted to post at 2.6%. But despite this picture, the primary focus for the South African government is boosting growth and investment in order to generate employment for South Africans.
Now joining me in studio to take a closer look at South Africa as a business and investment destination is Dawie Rood. He's Chief Economist at the Efficient Group, Greg Knott, Director and Head of Africa Practice at Worksman's Attorneys, and joining us from Lagos, Nigeria, Yinka Sani, Deputy CEO at Stanbic IBTC. Thank you all for joining us today. Let's get straight into conversation. Greg, with the recent spate of wildcat strikes we've seen, South Africa's been in the spotlight as an investment destination. We've seen equity market outflows. We've seen the rand weaken to a 3.5-year low against the dollar on the back of domestic issues primarily. Your view on where South Africa stands as an investment destination right now?
Alicia, thank you very much. It is really a critical juncture for our democracy. We've fought hard for it, 18 years of democracy. We've built and created institutions which I think we as South Africans should be absolutely proud of. If one looks at our constitution, it's something we should embrace just as we do the South African flag. Mm-hmm. These are issues which are very pertinent to us. Our economy really faces, as I said, a juncture. It's my belief though, as South Africans, we've got leaders, we've got institutions which can put us through this particular rough period of time. And I'm hopeful and optimistic, and I don't want to sound naive, but I'm hopeful and optimistic that this will be a period of time that we look back on and say, don't waste this crisis. It is a crisis, but it's time for us to work together to be able to pull together both as business, labour and also government. It's time to have the conversation. We can't be complacent. And as I said, and I'm talking now as a lawyer, that we certainly have got the institutions, we certainly got the legal framework for investment. And so I'm taking a view that as South Africa we can pull out and pull back onto the difficulty with Alicia, of course, is that we step back a bit. And it's always hard to make ground, so we can't lose that ground.
Well, Dawie, it's interesting that Greg made the kind of points he did, because all through the recent month we've been talking about a leadership vacuum in South Africa. We've been talking about the fact that you've got an organization like NEDLAC, that's very apparent, but we're not seeing the workings of it very apparent right now in terms of finding resolution to the current problem we find. And what was interesting is that despite all of this creating a lot of nervousness in the investment community. You've got a spokesperson for COSATU saying just this week on Carte Blanche that for every investor that steps out of the South African economy, you've got an investor that will step in. To what extent do you agree with commentary like that?
No, that is very naive. We have to remember that we are competing with many other countries out there for that pool of international capital that is sloshing around. And we want that pool of capital to come to South Africa and to be invested in South Africa. But coming back to your first question, is South Africa going to stay and remain the gateway to Africa? And the answer to that is most definitely yes. The South African economy is by far the biggest economy in Africa. But more importantly, South Africa's financial markets are so well regulated, are so liquid, and are so integrated with the rest of the world, and are so sophisticated that we can be compared to just about any other country in the world. And it's going to be extremely difficult for any other country to overtake South Africa in Africa. I think what we're currently experiencing, the things that you've mentioned, there certainly is a political vacuum. There's a lot of uncertainty as far as policy is concerned. We don't really know what economic policy in South Africa. I'm supposed to know, I'm an economist, but I get all these conflicting messages from government. There are a couple of things that we need to change, but there's so much going for South Africa that I have no doubt that we always do this. We somehow paint ourselves into a corner, and somehow we always get out of that. We're going to get out of this one as well.
Let's get a Nigerian's perspective on this. Yinka, let's take the conversation to you. I mean, I was at a conference last week, and the point that was made by one of the speakers at the event was, at least when you're investing in a country like Angola, you know exactly where the landmines are. You know that there are landmines about. In South Africa, you just don't know where they are. So, you know, from a Nigerian perspective, what's your view on the investment landscape and the investment case that South Africa is currently putting on the table?
There's a compelling case for investing in South Africa for many reasons that I can give you some of them now. I believe that South Africa presents an opportunity from an access point of view. Incredible access that investors get to South Africa, easy to do business. The returns are competitive relative to comparable countries around the world. Huge GDP, close to $400 billion and still growing. This year, the economy is projected to grow at 2.3% or thereabout. The stock market has been on a roll. In terms of physical infrastructure, South Africa presents decent infrastructure compared to the rest of Africa. So in my mind, the case for South Africa still leading the pack into the near future for some time is pretty strong.
Mm-hmm. It's pretty strong, but you know, amidst it all, we've got this perception of a nuanced shift in economic policy, and certainly louder calls from within the ruling alliance for change, begging the question, where are we headed in terms of long-term sustainable economic policy, and are we getting concrete enough answers being put on the table?
Alicia, I think one thing that investors love, and that's certainty. So we've got to provide the certainty for investors. And to a large degree, in terms of, I said before, our regulatory environment, and our legal makeup, we've provided that certainty. But there are big red flags out there. One of them, of course, is nationalisation.
Absolutely.
That is put on the table, and that spooks investors. So some clarity has got to come in and around nationalisation. And despite the best efforts of the Minister, Shubhangu, foreign investors still get different calls coming from our country, and that's what they're wary of. So we've got to be consistent in our message, we've got to be certain in our message, and we do that in a number of ways. Our political leaders must say the same thing as our business people, as our labour leaders. And that's what we've got, a concerted effort to talk as South Africans and show that certainty.
Okay, so let's take a look at some policy that's been put on the table. I mean, we've got BEE being tabled, and obviously this very much a drive of the South African government, Dawie. In some some quarters, the constraints of BEE are working towards leading to more aversion. I mean, it's a fine line that needs to be walked here between addressing the inequalities of the past and actually keeping investment appeal strong. So to what extent can or should governments adopt more progressive policies while at the same time addressing those past imbalances?
Can I just make a technical comment? Because quite often what is said is that South Africa attracts X% FDI of GDP, for example, compared to Mozambique, where their FDI inflows are significantly larger, relative terms, than coming into South Africa. And it's just a bit of a technical point. Remember, South Africa's financial markets are so liquid and so attractive, it is possible and it's easy to invest in the JSE. And it's much easier to invest in our JSE than in a stock market in Mozambique, for example, because they don't have one. So if you want to invest in South Africa, quite often you will go to the JSE or on the bond market, whatever the case might be, easier than going to start a new factory, for example. For that simple reason, in relative terms, our portfolio flows are quite often much larger than FDI. And you will get exactly the opposite in many other countries in Africa. And it is because our financial markets are more sophisticated. But I think the important point that you are making is that, and that's the reality, we have a certain political issues on realities in South Africa, and we've got certain social realities. And government most definitely take a step to the left when in 1994, but in recent, say, 3 or 4 years, there has been a further step to the left. And you can see it in all sort of variables. You can see it in government expenditure going up. You can see the emphasis is more and more on current expenditure. It's more on social kind of expenditures. And there is an increase in the tax burden. We're probably going to see a further increase in the tax burden to address the issues that you've mentioned. But I think what is important is to realize, for government, and the politicians don't always realize this, that there's a limit to these sort of things. Of course, you can use the private sector and the resources by way of taxes that the private sector provides you. But you can't overdo that, because then you're going to start killing the engine of wealth creation. And I think we're pretty close to that. But what needs to happen, and that's the reason why I think Minister Chabangu last week made a comment, nationalization is not on the table. So they shouldn't be clear about policy only. They have to repeat policy all the time.
You know, it's all good us sitting here and having this discussion, Yinka, at the desk, you know, where consensus seems to be that South Africa holds this competitive advantage. You've got to ask the question, for how long, though? I mean, comments not so long ago was that Nigeria will surpass South Africa as a leading economy on the African continent. It seemed a bit far-fetched when that point was made. Now, with all that's playing out, some people saying, well, that's not so hard to see.
I think you have to compare the basics. And when, you know, the argument is made about Nigeria surpassing South Africa soon, you need to look at the comparatives. In terms of GDP, South Africa, you know, multiples of Nigeria's, almost twice. In terms of population, granted, Nigeria is 3 times the size of South Africa. But I think that South Africa, given the system, the near world-class way of operating businesses, the reporting systems, the corporate governance, as well as the manufacturing technology, which has been in place for a long time. I think it would take some time before Nigeria catches up and maybe leaves South Africa. It's also good to note that in the last 4 or 5 years, where the world economy experienced a great downturn, South Africa, for reasons we all know, discipline, focus, and all that, has been able to weather the storm, so that whilst the rest of the world has experienced a deceleration, we saw South Africa last year recover, and this year we expect a positive growth as well in South Africa. So the point I'm making is that South Africa has been making steady progress. The disposable income in the middle class has been growing, and so it would take some time before the prediction that has often been made would come to pass. The prediction of Nigeria surpassing South Africa in terms of the size of the economy.
So where exactly are the businesses, you get exposure to via the Stanbic IBTC, a corporate investment banking arm, where are they directing their attention right now when it comes to investing in South Africa, Yinka?
the various sectors in South Africa that are proved very attractive to investors in Nigeria would include the real estate sector. And in terms of manufacturing, it's public knowledge that a major Nigerian conglomerate is seeking investment in the cement business in South Africa. There's also the consumer goods sector, not as attractive as Nigeria, or they don't deliver as much returns as Nigeria, but you can see that there's steady growth into the future in South Africa. In a nutshell, Nigerians have been, we have seen inquiries about people wanting to invest in real estate, in manufacturing, in South Africa. So the opportunities abound in various sectors in South Africa.
Well, Yinka, thanks so much for sharing your insights with us this afternoon. Yinka Sani is Stanbic IBTC Deputy CEO. We're heading into a quick commercial break right now, but more on Invest Africa when we return, so don't go away. Welcome back to Invest Africa. On the 26th of July this year, the South African Department of Trade and Industry announced the country's intent on refraining from entering into any future bilateral investment treaties. The bilateral treaties play an important role in investors' decisions to invest in markets and therefore will greatly impact the country.
South Africa has many BITs with the aim of providing protection to foreign investors. After the apartheid era, the South African government embarked on ways of creating an investor-friendly environment and therefore concluded a number of BITs, more notably with the European Union. The decision to not renew existing BITs will result in the gradual phasing out of the European countries, who contribute to over 80% of total FDI into the country. There have also been rumblings that such an approach by the South African government could pave the way for further talks and perhaps the implementation of nationalisation of resources, and may therefore scare off potential investors.
I'm asked in Europe, should we still invest in South Africa? And of course I say, yes, by all means do it. But then people point at several issues. They point at the nationalization debate. They point at Marikana. They point at the BITs. And we are brought in a defensive position. And I don't want that the South African government and myself are in a defensive position. I want that we are able to show, no, look, everything is in place, come.
But this has not entirely deterred investors from South Africa. German companies and investors, for example, are still looking to further deepen and strengthen ties with the country.
The German economy, especially our small and medium-sized enterprises, have a long-term interest in South Africa. So I think a rating by rating agencies, Moody's and so on, are not so important. I think more important is the question of skilled people, the question of security, and very good system for investors. And so I think South Africa is a very good market for automotive industry, maybe for raw materials, and that is a new market for renewable energy. And that is the reason why our companies will come to South Africa now and in the future.
Despite the challenges that South Africa faces, growth prospects for the country are still positive given the investments made in recent years. And with large infrastructure projects currently underway, South Africa is gearing to accelerate its economic growth. Tumisho Maganyele, South Africa, Johannesburg.
Still with me in studio, Dawie Rood, Chief Economist at the Efficient Group, and Greg Knott, Director and Head of Africa Practice at Worksman's Attorneys as well. Dawie, we've got the Department of Trade and Industry trying to incentivize business even more so and investment with mechanisms like the bilateral investment treaties. How do you rate effectiveness of a mechanism like that?
I think the approach is wrong. I think the approach should not be what can we do to get more integration with the South African economy with the rest of Africa. I think the first step should be and must be just to remove the obstacles in the way of integration. And there are many examples of obstacles if you want to do business in Africa. A simple example, if you want to go through the border post, you have to have a passport. Why can't we get a SADC passport, for instance? Why do you have to go through a border post if you want to transport something? Why is it not easier? Why can't we just drive the lorry through the border post? Those sort of things should be done. And of course, many other things, like, for example, in the case of South Africa, it's not easy to start a business in South Africa. South Africa is a sophisticated economy, and it's quite often, from an administrative point, easier to start a business in, say, Botswana, for example, than in South Africa. But of course, South Africa is more sophisticated in a way. I guess we have to have a little bit more paperwork, but make it easier. And those are the sort of things. So the emphasis must be not on what can be done, but what can we do to remove the obstacles?
So that's some of the red tape that businesses have to deal with. What about the cost of doing business? I mean, it is high and it impacts return on investment at the end of the day. I mean, we've had businesses having to deal with escalating costs on the labor front, infrastructure costs as well. When do you see us getting to a point where infrastructure is supportive of South Africa being fully open for business?
Yes. Alicia, if I may, just to pick up on Davi's point in terms of taking away the barriers in Africa. A couple of years back in Tanzania at the World Economic Forum, Africa Economic Forum, there was a round table of presidential leaders, funny enough. And why I said it was put to the highest level. And the biggest discussion at that particular seminar and meeting was the removal of visas. In other words, make access from east to west, north to south, acceptable and easy. And it was a discussion about visas, nothing more complex than get those visas gone so you can actually have the trade between nations. So that is one of the big issues. Yeah. Coming back to cost, yeah, of course, cost is a hugely important aspect, and of course, right now at the moment with wages, energy costs, that's precisely what investors look at, and also access to local and to foreign company finances in South Africa. So it's energy costs, wages, and looking at the costs of finance. Those are big issues. Coupled to that, of course, is also the speed of doing business. That's the big issue, because the longer it takes, the more costly it will be. So the more effective, the more efficient that we are in working between our institutions and the company's registrar's office or the master's office or whatever the case may be, investors want simplicity and efficiency.
So what investors want is support by government, and by all the levels of government, the local authorities, provincial, the central government. And the reality is, just have a look at the Auditor General's report. Those guys are not good, really. Yeah. They are, in fact, I think that's the single biggest threat to the South African economy. It's a state that is collapsing in its own weight, in its own incompetence. It takes too long to get just about everything. But I must say, there has been some improvement recently, but we can do so much better. Something that I think that I would have done as a first priority, if you look at the local economic issues in South Africa, I would certainly look at our tax regime. It is far too complicated, it's far too difficult, it's far too expensive to run.
Expensive, Davi. I mean, we've had some say possibly the high levels of taxation experienced on the African continent, with African companies taxed the highest, is one of the biggest impediments. I mean, it's, it's come to business as a very big constraint. Should we be using our fiscal policies more effectively to draw in investment?
Yes, but again, not use it, but use it less. And you can do it less, but what I mean by that is, look at your tax system, for example, and simplify that. Don't use tax incentives to get people to invest. Just make your tax system so simple and straightforward that people want to come in any event. If you want to use your fiscus, do it on the expenditure side. If you want to support somebody somewhere, give a subsidy rather than to give some sort of tax break. Because but the moment you give some sort of tax break or some sort of exception on the tax side, then you complicate things and you create opportunities for corruptions and all that.
And when the day comes where you need to actually reverse things, that's when you trigger a whole lot of uproar. Greg, let's look at the sectors that we had Yinka highlight at in the first part of the show in terms of the sectors that are drawing investors in. He highlighted real estate specifically, more so on the residential side, but then manufacturing and capabilities there in a very big way too.
Well, manufacturing, funny enough, and Davi can talk to this better than I can, but manufacturing at the moment, as the rand slides, should be happy days for them. But of course, with industrial disputes taking place, that works against it. But with the rand positioned as it is at the moment, that should be happy, as I say, happy days for manufacturing in our country. And that's what we need, because manufacturing provides jobs. Jobs provide security, it mitigates political risk, and hence investors come into our country. So the rand is working in our favor at the moment, but against us is industrial action.
Absolutely.
I'm afraid the rand's not going to save us, because there's a lot of empirical evidence that the weak rand is actually bad for us. And in any event, even if the rand was that silver bullet, you can't keep on using the currency. The value of that's going to be eroded through inflation in any event. We need to address labour issues in South Africa, and actually what we should have had the past 2 or 3 years is another boom in investment, especially on mining. We haven't seen that, again, because of policy uncertainty.
Well, what about a focus on, sorry to interrupt, but a focus on other industries aside from your mainstream sectors, where we know beneficiation has been very much on the radar screen?
Well, something that I think South Africa has got to really, what we can offer a lot to the rest of Africa is in the service industry. I'm referring specifically to financial services. And that is exactly what is happening. All our banks are in Africa, the investment managers are in Africa, they are really expanding into Africa. And Africa, many countries in Africa, the financial environment is not really very modern yet. I mean, there's a lot of things that need to be done, and maybe we can send our financial gurus in there to assist some of those countries. We know from my company, we are doing business with other countries in Africa, but sometimes it's just about impossible, because they don't have legislation, they don't have a proper support system. We don't even know whether we need to be registered somewhere as an asset management, for example, if you go to Mozambique.
I agree with that, with professional service. But another sector which is quite interesting and often overlooked, which traditionally quite strong in, is agriculture. Now, if you look at Mozambique, for instance, up in the Tet province, we have Motis and so on, and gas finds and oil finds and so on. What is needed is food, and that we can export, and that we are exporting at the moment. In fact, it's quite a success story. And that's something which is one sector which we just don't seem to necessarily hone on and say, and I agree with Dawie, there is absolutely no silver bullet. It's all working together. That's what we have to do.
Well, Greg, Dawie, unfortunately we've run out of time, so we're going to have to leave the conversation there. But consensus at the desk for now seeming to be that South Africa still does hold competitive advantage when it comes to it being an investment draw card for investors globally. It's interesting because we've had quite a few critical comments doing the rounds this week. One from Business Day's Peter Bruce saying, another week, another downgrade. If this gets any more regular, we'll be able to calculate to the day just how long it took the African National Congress to shut down the economy as an investment prospect. So these are the conversations that are being had, but nice to see that we've still got some optimism that that presents itself right now. That's all we have time for this edition of Invest Africa. We'll be back again at the same time next week. Until then, from me, Alicia Seckham, and my guests, it's goodbye.